We now cross live to BNP Paribas economist Eoin O'Callaghan. Good to have you on the show, Eoin. They don't really need cash, right? The NTMA in Ireland sits on about 20 billion euros, and yet they insist to tap the markets today in that sort of climate. Is that wise?
Well, I think it's trying to send a signal that they're confident about their funding prospects and that they won't be scared away from the market. But you're absolutely right. They're in a very strong liquidity position. Not only have they funded for this year, they're pre-funded well into next year. And as you said, they have cash balances in the exchequer of around 20 billion euros.
And yet the bond market's reacting already ahead of that bond auction today. Why do you think that lower to about 400 basis points?
Well, I mean, there's a number of reasons for the latest widening. Firstly, an anticipation of greater supply, and the confirmation that will come typically does put pressure on prices. Secondly, I think the article in the FT yesterday about the ECB still considering steps to normalise monetary policy operations may have hurt sentiment, because Irish banks still, for the marginal lending, very much depend on the ECB. And third, I think there's a general realisation now that the government will have to do more when it announces its budget in December, because its growth projections for next year look a little bit optimistic.
And also this obviously increase in the yields makes tapping the market for more money much more expensive and implicates the fiscal position as well. And this tying in with the pre-budget report, what do you think we'll be looking at in the pre-budget reports? We already have 2 years of austerity in Ireland. How much more can Ireland save?
Well, the government earmarked about 3 billion euros worth of savings to announce in December for next year. And it will probably have to do more than that, because its nominal growth forecast for next year is well over 5%. To give you an idea, they're expecting real growth in excess of 3%, whereas at BNP Paribas we have less than half that, and we have even lower nominal growth. So there'll have to be a fair downward revision.
But looking at the latest economic releases, looking at the second and the first quarter, which, to be fair, was the first quarter with expansion in more than 2 years, if you strip out exports, then actually the situation is still dire, with unemployment around about 13%, company investment falling, consumer spending. We don't even have to talk about that. Where is any sort of growth going to come from?
Well, I mean, the success of Ireland in emerging from this crisis is really down to global growth. As you mentioned, domestic demand is contracting, but that's really to be expected when you're fiscally consolidating. Investment in housing was far too large previously, and also the consumer is retrenching. So really growth going forward has to continue to come from net trade.
And apart from that, the banking sector is still in a dire situation. A lot hinges on how much the government has to put in further in order to bail out the banks. And the Standard & Poor's already had said that Ireland might have to do more for the banking sector. What is your view?
Well, I think that it's very uncertain, because ultimately, while we can give projections about the losses in institutions like Anglo, it's very much a function of how far property prices fall in Ireland, which is something that neither the government nor private sector forecasters know with any certainty. One thing I think we should be aware of is that if we do see a bottoming out in house prices, then you could see a very sharp reversal in sentiment, because suddenly the estimates of the losses become far more meaningful. But that's really something to hope for in the future.
At the bottom line, is Ireland indeed facing a liquidity crisis? Because we had your esteemed Nobel Prize-winning economist Joseph Stiglitz saying yesterday that indeed there's a very high risk that Ireland might need to ask for aid.
Well, there is, of course, a risk, but if you're talking about in sheer terms of liquidity, and as we mentioned earlier, Ireland is in a far better position than Greece was at the moment of its crisis previously. The thing that differentiates itself in terms of liquidity is that Ireland's been very clever in the way it's funded itself, pre-funded aggressively, and, as I said, raised these cash balances for precisely this reason.
And just the bottom line on the economy, when do you think we'll see, again, a full year of growth in Ireland?
Well, as I mentioned previously, I'm expecting growth next year, but really there's quite a lot of uncertainty about Ireland. With net trade, because exports and imports are such a huge proportion of the economy, small changes in growth in either can have very big implications for growth. But I'm expecting some sort of nominal GDP, real GDP growth next year.
Eoin O'Callaghan from BNP Paribas, thank you so much now.